We all know that taxes, they just feel like stress and potential ways to hurt your business or mess something up.
Let me take a quick minute and just dispel a rumor because this is a really big, terrible piece of advice that's out there. That's the gut punch that most people aren't prepared for is that self-employment tax. One big detriment that a lot of creators' mindset that they have is not considering themselves a business. Do I need to pay taxes on the samples I receive?
Can you claim purchases that you've bought and made shoppable content on?
Do I even need an LLC?
About how much of their content creator income should they be putting aside for when taxes come around?
Welcome back to Brands Meet Creators. We're a team of expert content creators that help other creators make money creating content and grow in their career. Whether you're focusing on UGC, TikTok Shop, the Amazon Influencer Program, or you simply want to grow your own social media accounts, we're here to help you. You can even join our Brands Meet Creators Academy, where you'll have access to weekly live coaching calls, exclusive brand opportunities, a 24/7 supportive creator community, and online courses and tools that will teach you how to make better content and get paid to do it. Whether you're a beginner or an expert, this is the place to connect with coaches and other creators. And you can even get started with our academy for free by using the link below. Now let's get into today's video.
Welcome everyone. Super important time of year. We all know that taxes, they just feel like stress and potential ways to hurt your business or mess something up. And we know as creators that sometimes it's hard to find the right resources and the right people, let alone the ones that actually understand content creation. But thank goodness we have our good friends from Cookie Finance here. We've got Nate and Katie.
So I'm Nate. I've been a CPA for about 12 years and started Cookie Finance a little more than 2 years ago. And the whole point of Cookie Finance is to really bring financial peace of mind to content creators. And so I have two sister-in-laws who are content creators and just saw the horrible time that they had with their taxes, kind of working with local mom and pop accountants, terrible advice they were getting, saw all the fraudulent advice on TikTok for creators. So the whole point is just to provide the bookkeeping, the quarterly taxes, end of year taxes, all that help for content creators and let them get back to creating. And we're taking care of all the other stuff.
Hopefully we answer those burning questions about do you have to pay taxes on samples and all of those things.
I'll start with the very first one that's really top of mind for people is, do I need to pay taxes on the samples I receive? There's a lot of conflicting information out there. Some people say yes, some people say no. How do I actually go about doing that? So with samples, there's kind of two different samples that you need to think about. One is just a PR box. So a brand sends you a PR box and they say, hey, we really hope you enjoy this makeup or this box of cookies, and wink, wink, clearly hoping that you will then take that box and then do something with it, post about it, give them a review. So those type of gifts, you don't agree to do anything. They just sent it to you. You do not need to claim anything on your taxes for those gifts. There's no obligation. You do not need to track those for tax purposes, report them, anything. Then there's the second kind, and this is the one that can get really tricky and a little bit nuanced. And that's a situation where, let's say a hotel comes to you. I'm staying in a Hilton right now, so I'll use Hilton. Hilton comes to you and Hilton says, hey, Nick, really love your brand, love what you're doing. We'd like to gift you 3 nights at our Orlando hotel. In exchange, we expect you to do X, Y, and Z. Post this, review this, do this in return for those 3 nights. Do you agree to that? And you say, yes, I agree. Let's go. That's what's called a barter transaction in the eyes of the IRS. You're exchanging goods and services, not money, but you're exchanging goods and services. Now, what the IRS says about that is technically income to you, and you are technically supposed to report the fair value of that gift as income on your tax return. So Nick might look up and be like, what would that stay would have cost me if I were to just buy it on my own? He looks it up and says $750. That is what he would report as income on his tax return, is the fair value of that gift. Now, I said that there are a lot of nuances because there are nuances with that. If you are getting a bunch of $50, $100 samples from beauty brands, things like that, don't worry about tracking that. You will go absolutely bonkers if you're trying to track every single little tiny thing. What we tell clients is, if you're going to claim that as income, focus on the big ticket items. If you received an LG refrigerator worth $10,000, let's focus on that, not $50, $100, $200 samples, those type of items. The IRS is not going to worry about those little ones. Now, the second part. So I'm going to report that refrigerator or that Hilton stay as income. What is fair market value? If you go and ask the brands, if you then message Hilton back, you say, Hilton, what should I put on my taxes? They're going to be like, whoa, 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 Nick. You go figure that out with your accountant. We're not going to say anything. This is totally up to you. You got this, right? It is all over email. The reality is the brand's not sending anything to the IRS. There's no financial record of it. What you do with that information is kind of up to you. But I will say, don't worry about the much smaller ones. The IRS will not care about that. If a company is actually sending you gift cards or cash, then 100% they are going to report that on a 1099. If you receive a Lowe's gift card, they're expecting you to then use that gift card to go to Lowe's to buy the product for that build that you can then post about. So all that expense is also deductible. So that's a little bit different. In the Lowe's example, if Lowe's gave you a $1,000 gift card, you'd report that as income, but then you should go and spend $1,000 at Lowe's for the product for that build. So then you have $1,000 of expenses. So then it nets out to zero. You'd owe no taxes on that.
Can you claim purchases that you've bought and made shoppable content on?
If you are a TikTok Shop affiliate and you want to maximize your earnings, we want to send you our free TikTok Shop newsletter. In the newsletter, you will get the latest tips, trending hooks, insider updates, all delivered straight to your inbox. And you can even unlock bonus commission on the hottest trending products. All you have to do is sign up using the link below.
So for example, if I go buy flashcards on TikTok Shop and then I go make some content for TikTok Shop.
So let's use your phone, for example. Let's just take my imaginary Google phone right here. And if you think about Google, what they had to spend to develop that phone, they had to spend hundreds of millions of dollars on research, development, supplies, materials, all of that they had to spend to then mark up and sell to you. Now, who knows? They might make a loss, but the goal is ultimately to make money on that. So the content creator, like we really like that to be your North Star when you're trying to figure out, are these flashcards deductible? Are these ear pods deductible? Is this and this and this deductible? What you should be thinking about is you as a creator also has a product that you are selling. Google is selling their phone and their advertising revenue and YouTube, all that crap. But you also have a product that you are selling. You are selling your brand, your access to your audience, the trust that you've built with that audience, that engagement that you've built. That is what you are selling to brands. Lowe's, as an example, is giving you money because they want access to your community, the reputation, the brand that you've built, the community that you've built. So if that's what you're selling and that's your product, that means all the expenses that went into building that are going to be expenses that are deductible. That is the framework you should be using of like, is this helping me build my brand, my audience, my engagement? Is it helping me land sponsorship deals in the future? Do affiliate links with these type of things? If the answer is yes, then those things are probably going to be deductible. Now, don't go crazy and be like, well, my brand new G-Wagon I bought, like, of course that has to be deductible because like I need the G-Wagon and I had to buy all this crazy personal stuff. Don't go too crazy. Your whole life is not deductible. So yeah, anything that's like going into building that content is going to be deductible. Back to the TikTok Shop example, if you're like LTK affiliate or Amazon affiliate, anything that has affiliate links associated with it is going to be deductible. Even if you don't make any money at it, you still tried. So those are kind of easy deductions.
Let's talk prizes because we work with a lot of brands that have all sorts of prizes. Like, hey, if you make us $1,000, we'll get you an iPhone. Do things like that work a little bit differently? Do they now have to pay taxes on that iPhone, for example?
They do. That's where companies would probably be more sticklers about sending 1099s, especially if it's a cash prize. You will definitely get a 1099 at the end of the year with a cash prize. It's considered compensation, and so you do have to report that. Let me take a quick minute and just dispel a rumor because this is a really big, terrible piece of advice that's out there. There's like this conception out there that if you earn less than 5,000 from content creation or less than 12,000 or less than 600, like whatever that number is, then you don't need to claim that on your tax return. And that is 100% false. If you even earned $1 from your content creation, you need to report that on your tax return. Some people are like, oh, but it's just a hobby. And like, if I call it a hobby, then I don't need to report it. No, you still need to report it on your tax return. All it takes is for one brand to send you 1099. You don't report it. Then the IRS flags it. You don't want to go down that path. Every single dollar, regardless of how much you've made, needs to be reported on your income.
But Nate, here's the big one. I'm always wondering this myself. My haircuts, or when someone goes and gets their nails done, can you write that off as a content creator?
It kind of goes back to the general rules that the IRS uses is the expense ordinary and a necessary part of your business? Because it kind of goes back to that idea of, does this help you build your brand, build all these different things, right? It kind of talked about that. Let me talk about the IRS side of things. So the last time the IRS did a major overhaul of the tax code was 1986. The tax code is literally thousands and thousands of pages. And trying to overhaul that every couple of years with divided Congress and presidencies and everything else, like it just would not work. When they do major overhauls, they want it to last for decades. Now, what that means is when they create the code, it has to be able to survive new technology, new industries, new trends, all these different things. So because the tax code has to be that way, it's fairly broad and very gray. And people don't like to hear that. They're like, no, just tell me, is this deductible? Yes or no? And the answer is almost always potentially. There's a really good chance it is until the IRS actually comes and tells you. Like, there's some things that are black and white. Botox, unfortunately, you cannot deduct that. That is black and white. You cannot deduct cosmetic surgery. Everything else, pretty much a lot of things, it's going to fall into this gray area. Then you have to use that kind of like framework I talked about earlier of like, is this a necessary and ordinary part of my business? Is it helping me build my brand, my content, my audience, my engagement? If the answer is yes to that, then most likely you can write that off.
Here's another good one it's not exactly related, but I know it's on a lot of people's mind. What's the income requirement to work with you guys? And do you have options for part-time content creators?
Great question. So with any type of accountant that you work with, if you're making less than like $60,000 to $75,000 a year, or you're on track to make less than that this year, it probably makes sense, honestly, to kind of do a DIY approach. Get your LLC set up, get a separate bank account set up, really keep business and personal separated as much as possible. Do your own tracking of income expenses as much as possible, because at a minimum, it's going to cost $350 a month to work with a good quality bookkeeping tax team. And you don't want to like take 10, 15% of everything you take and give it to your accountant. Now, once you get past 60, 75,000, you're starting to like get bigger and bigger, bigger. Your time is a lot more valuable. And it starts to make sense to become what's called an S-Corp. Then it starts getting to the realm of you could definitely work with an accountant. So that's kind of like a general broad guidelines, whether it's us or someone else. Less than $60,000, $75,000 a year, maybe you can kind of DIY. And once you're above 100, 125,000, definitely work with an accountant, because you will save more money than what you're paying in actual fees for that accountant.
Super, super helpful to know. So for all the people that are on the fence and you're like, I'm like starting to get there as a content creator, we definitely recommend. That's why you get a free consultation with them. And even if you're not at the level yet, maybe you get on that free call, you learn a lot about how to save and organize your taxes. Maybe you're not ready to work with them yet. That's still so amazing, because that's going to set you up for massive, massive success. Can you dive into that a little bit, Nate, for some of our more experienced creators, the whole like LLC, S-Corp, paying yourself?
I'd say the first big question is, do I even need an LLC? If you are taking content creation seriously, you're earning, call it more than $1,000 a month, it makes sense, like, form that LLC. The big benefit of an LLC is, one, it gives you personal asset protection, liability protection. As public figures, you're out there more and more and more. And the more you work with doing brand deals, the more likely lawsuits are going to happen. We see that with all these celebrities who backed these crypto companies who then went bankrupt. The celebrity endorsers are also getting sued and getting caught up in these lawsuits as well. If you operate under just yourself, a sole proprietor, you have no LLC, no nothing, you're part of a lawsuit, you lose. In order to fulfill that judgment, basically the courts can go after any of your personal assets, your home, your car, your dog, your cat. You don't want that, right? Like, you've worked hard and you're working hard to build up your personal assets. You want to make sure those are always protected. So when you operate under an LLC, The most that they can go after are the assets of your business. Now, as a content creator, assuming that you're distributing a lot of your cash, like your personal accounts and everything else, the assets of your LLC are going to be very, very minimal as a content creator. So the most they can go after are the assets of the business, which are very little. That's the first really, really big important thing. The other big thing is that it starts to legitimize you as a business. One big detriment that a lot of creators mindset that they have is not considering themselves a business. It's a hobby, it's a side thing. They don't consider it like a real legitimate business, which it is. We were just at a conference a couple weeks ago, and this girl was talking with me and Katie, and she's like, yeah, like my content creation is kind of like this a side business, like a hobby. And we're like, oh, how much are you making? She's like, about $10,000 to $12,000 a month. I'm like, that is not just a cute little side business. That is a real business. So that LLC establishes legitimacy in the eyes of the IRS and some other things. So that's kind of like the first part of like why it makes sense to form an LLC and when it does. You form it with your state. You can use a service like Zen Business. It's super cheap. I would recommend you do it as soon as possible. Then it comes time to the S-Corp. So the S-Corp is a special tax election with the IRS. You don't choose, oh, do I want to be an LLC or an S-Corp? You will always be an LLC. That's where you get your legal protection and everything else. And the S-Corp always like sits on top of it. It's just a special tax designation with the IRS. Now, why would we want to be an S-Corp? Is because as just an LLC, one of the biggest taxes you are going to pay are self-employment taxes. So you have federal taxes, which suck, state taxes, which also suck, unless you're in Florida or Texas and you're like, rock on, I don't have any taxes. That's great. But then the dreaded self-employment tax. That's Social Security, Medicare. It's 15.3% on top of those other taxes that you owe. A lot of times that number, that tax amount can be bigger than the taxes you owe for your federal income taxes. That's the gut punch that most people aren't prepared for, is that self-employment tax. The S-Corp essentially allows you to avoid paying half or more of those self-employment taxes. In the example I was using earlier, like if you're making $125,000 a year from your content creation, you could potentially save $10,000 to $12,000 a year by being an S-Corp. Yeah, you might spend a few $1,000s for your accountant to get that set up and organized and put together, but then you can save $10,000 to $12,000 in taxes by avoiding paying some of the self-employment taxes. That's when it starts to make sense, like put yourself on payroll. Everything else is when you're an S-Corp, but LLC, you don't need to worry about putting yourself on payroll and all of that. Like it's just when you become an S-Corp. It's like building the good foundation to your business. It's getting an LLC, getting a separate bank account, ideally in the LLC's name and EIN, but if not, that's okay too. But like get a separate bank account, splitting the business and personal, and tracking your financials. Those three things set you up for so much success later down the road and pay off huge later. Now, we will work with you no matter what. 85% of all clients who come to us, even clients who are making $1 million a year, they have no LLC, they have no separate bank account. So the more you can set yourself up now, the easier it'll be going forward with that stuff.
We get a question pretty frequently about, can I form my LLC in a state with no income tax to save money on taxes?
A huge myth out there is, okay, I live in California with the highest taxes in the country. What I'll do is, because this is what TikTok told me, is if I form my LLC in Wyoming that has no state income taxes, then I avoid paying the state income taxes because my LLC is in a separate state in Wyoming while I live in California. That information is 100% incorrect, wrong. Do not listen to that advice. So let me tell you how sole proprietors, LLCs, S-Corps, and partnerships, all of those are considered pass-through entities. What that means is all the income you earn as a sole proprietor or an LLC or an S-Corp, it passes through the business and it lands on your personal tax return. If Katie is in LA right now, but let's say her LLC is set up in Wyoming, that's great, but all of that income and expenses from her business would flow from the LLC and onto her personal tax return. But then on her personal tax return, it shows the income expenses. And then she then reports that income to the federal and state. So then she pays taxes in California. So you cannot avoid taxes by having your LLC set up in a different state. Ignore that advice. You will not save money in taxes.
About how much of their content creator income should they be putting aside for when taxes come around?
So we have a general rule of thumb that if you add up the federal taxes, the state taxes, and that 15.3% self-employment taxes, now you will have deductions and so on that will lower your taxable amount. But if you take 25% of everything you make, you get a $10,000 brand deal. You take 25% of it, you throw it into a high yield savings account. Don't leave it in your checking account. Leave it there so you can pay your quarterly taxes. That should be more than enough to cover all of those taxes we just talked about. We work with clients all across income spectrum, and that has really been a good rule of thumb is about 25%. So every time you get paid, take 25% of it. It is not yours. It is the government's. Don't pretend like it's yours. And at the end of the year, if there's some left over and you overpaid, that's great. But the last thing you want to do is be caught short on that. And then it just can put a lot of people in a bind.
I remember the first time that I was like, I think I'm ready to upgrade to someone that's a little bit more serious in this space. And then they told me like, yeah, it's going to be a couple $100s per month. I was like, oh, I am not in a place right now to spend a couple $100s per month on that. But then they kind of sat me down and they were like, here's the two scenarios. Here's what happens if you do that. And here's what you don't. And the math was saying the dumbest thing I could do is not work with the good accountants because I ended up saving so much more on those penalties and interest, on the things that I could have written off that I didn't know I could, on the tracking that I didn't have to do because I had help staying organized. And on top of that, all the little tricks about paying yourself and doing it this way and don't make that mistake. There's always those little secrets. And it's so rare to find an accounting team that truly understands us as content creators. Nate and Katie, thank you guys so much for being here.
Yeah, thank you so much. Even if you're not making enough money to work with us, or like, I don't really, I have an accountant, I just want to hear some more advice, please just book a call. Like, we're here to help you. We can work with clients in every single state. We're here to support you. So book a call with us, if nothing else, and just like answer the questions and get that advice that you need to make sure that you're doing things right.
Amazing. And I just love the mission too. You guys are solving an incredibly niche problem, right? Taxes for content creators. It's a horrifying thing. And it just plagues us all year long. We're thinking about it. Do I have enough money set aside? I'm going to get crushed during tax season, all these little things. So to have some peace of mind and know that there's people out there that are helping us, the creators, so amazing. So Nate and Katie, again, thank you so, so much. And we will see you next time.